Let's talk about the American Farm Belt, a vast stretch of land that's fed not just America, but the world. Spanning from the Dakotas down to Texas and across to Ohio, this region is the beating heart of U.S. agriculture, where endless fields meet the horizon and the soil is rich with history and promise. For decades it was a symbol of American productivity, churning out corn, soybeans, and wheat on a massive scale. These crops became the backbone of not only the nation's food supply, but also a key driver of the global food chain. These aren't just family farms, they're high-tech businesses using GPS-guided tractors and data analytics to maximize every harvest. Today's farmers rely on cutting-edge technology, from drones monitoring crop health to automated irrigation systems, all designed to squeeze every possible bushel from the land. This agricultural dominance gave America global influence. When you feed the world, people listen. U.S. crops became a diplomatic tool, opening doors and forging alliances far beyond American borders. The system was simple. American farmers produced, the world bought, and everyone prospered. It was a cycle that seemed unbreakable, fueling rural economies and supporting millions of jobs. Nations everywhere depended on the steady flow of U.S. crops, creating a sense of security for both buyers and sellers. The world's breadbasket was open for business, and trust in American reliability ran deep. Farmers in Iowa, Nebraska, and Illinois could count on a market for their crops every fall. Generations of families built their lives around this dependable rhythm, passing down knowledge and land. But being the golden goose has its risks. It makes you a target and can breed complacency. When you're on top, it's easy to believe the good times will last forever, and warning signs can be ignored. The U.S. Farm Belt assumed its top dog status was permanent. That demand would never dry up. Confidence ran high, and few questioned whether the world might one day look elsewhere. But in global trade, nothing is guaranteed. Markets shift, alliances change, and new competitors are always waiting in the wings. And one of America's biggest customers was about to start shopping elsewhere, leaving U.S. farmers with a surplus and a problem. Suddenly, the certainty of yesterday gave way to anxiety about tomorrow. The ground was shifting, and few saw it coming. The warning signs were subtle at first, but soon impossible to ignore. The golden age of American agriculture was about to face its biggest test yet. The future of the Farm Belt and its role in feeding the world hung in the balance. Now, let's zoom in on China, the customer that changed everything. In the early 2000s, China's rapid economic growth was transforming the world's food markets. China's booming middle class wanted more meat, and that meant more soybeans to feed livestock. As millions of people moved into cities and their incomes rose, their diets shifted dramatically, with pork, chicken, and beef becoming everyday staples. America, with its endless soybean fields stretching across the Midwest, was perfectly positioned to supply this demand. U.S. farmers ramped up production, knowing that every extra acre planted could mean more profit. At its peak, China bought about a third of all U.S. soybeans, billions of dollars worth, every year. These exports became a lifeline for rural communities, fueling local economies and supporting thousands of jobs. For American farmers, China wasn't just a market, it was the market. The relationship felt like a golden ticket, promising stability and growth for years to come. This relationship fueled expansion, more land, bigger equipment, and bigger loans, all riding on the assumption that China's appetite would keep growing. Farms modernized rapidly, investing in technology and infrastructure to keep up with demand. The formula was simple: plant beans, sell to China, make money, repeat. It seemed almost too good to be true, and for a while, it was. But putting all your eggs in one basket is risky. Relying so heavily on a single buyer left farmers exposed to forces beyond their control. American farmers became dangerously dependent on a single, unpredictable customer. Every news headline from Beijing or Washington could send prices soaring or crashing. All it would take was one political spat to turn this dream into a nightmare. Trade tensions simmered beneath the surface, threatening to upend the entire system. And that's exactly what happened. When the trade war erupted, the impact was immediate and devastating. The U.S. Farm Belt's prosperity was built on a fragile foundation. Years of growth unraveled almost overnight. When the cracks appeared, the consequences were immediate. Equipment was auctioned off, and once thriving fields were left fallow. The soybean boom was about to go bust. The optimism that once filled the heartland faded, replaced by uncertainty and loss. And the fallout would be felt far beyond the fields. Entire communities, built on the promise of soy, now faced an uncertain future. Then came the trade war. The US slapped tariffs on Chinese goods, hoping to force economic concessions. China hit back hard by targeting American agriculture, especially soybeans. Suddenly, US soybeans were too expensive for Chinese buyers, who quickly turned elsewhere. The cash flow from China stopped almost overnight. Ships that once carried billions in soybeans sat empty or rerouted. American farmers, who'd planted for a market that vanished, were left with mountains of unsold crops. The trade war, meant to protect American interests, instead devastated the very farmers it claimed to help. Experts had warned this would happen, but those warnings were ignored. China called America's bluff, and farmers paid the price. The fallout was swift and brutal. The Farm Belt's economic engine stalled, and trust was shattered. The cost of this political gamble was measured in livelihoods lost. The impact on the Farm Belt was immediate and severe. With China gone, a glut of soybeans flooded the US market, sending prices into freefall. Farmers were losing money on every acre they harvested. Those who'd borrowed to expand now faced crushing debt with no way out. Bankruptcy soared, wiping out family farms that had survived for generations. Government bailouts offered a temporary lifeline, but they couldn't replace lost markets. Farmers didn't want handouts. They wanted to sell their crops. The psychological toll was immense. Farming is an identity, not just a job. Watching a family legacy slip away was devastating. Depression and suicide rates among farmers climbed. The dream of passing the farm to the next generation was replaced by fear and uncertainty. The heartland was breaking, economically and emotionally, and the crisis was just beginning. While American farmers struggled, China simply shopped elsewhere. Brazil, another agricultural powerhouse, eagerly filled the void, ramping up soybean production for China. China diversified its suppliers, buying more from Argentina and even Russia. New trade deals and infrastructure investments locked in these relationships. China was building a global supply chain that deliberately cut America out. These new partnerships aren't temporary, they're structural and hard to reverse. Chinese importers now have strong ties to Brazil and Argentina. Why return to a politically unreliable US? The trade war didn't just cost America a sale, it cost them the customer, maybe for good. American farmers now face fierce global competition for a shrinking share of the market. While Washington fought trade battles, competitors signed contracts. America's market share was served up on a silver platter, and others were happy to take it. China's strategy goes beyond buying crops. They're investing in farmland and infrastructure worldwide. Chinese companies are pouring billions into agricultural projects in Brazil, Africa, and Eastern Europe. In Brazil, they own grain trading firms, ports, and logistics networks, controlling the supply chain from farm to ship. In Africa and Southeast Asia, they lease or buy land, bringing in their own technology and labor. The food grown there is shipped straight to China. This is food security on a global scale. If you can't trust suppliers, grow it yourself. It's a new form of agricultural colonialism, and it's spreading fast. The US Farm Belt's position is more precarious than ever. China is building a parallel food system that bypasses America entirely. While US farmers struggle, China is securing its future. The world's food power balance is shifting, and America is losing ground. The collapse of the Farm Belt isn't just about crops, it's about entire communities unraveling. Rural towns depend on farming. When farmers lose money, everyone suffers. Equipment dealers, seed suppliers, mechanics, all see business dry up. Local stores and restaurants close, and Main Street empties out. As jobs disappear, young people leave for the cities, accelerating rural decline. Schools and hospitals shut down, and the social fabric frays. Once vibrant towns become ghost towns in the making. The crisis is more than economic, it's a social catastrophe. The heartland's way of life, a cornerstone of American identity, is eroding. Empty fields and boarded-up shops are stark reminders of failed policy. The consequence will echo for generations. The Farm Belt's decline is a national tragedy, not just a rural one, and the damage is spreading. So, what now? Can American farmers recover from this crisis, or is this the beginning of a long decline for rural America? The best hope for a turnaround is a major thaw in US-China relations, leading to the removal of tariffs and a reopening of trade channels that once fueled American prosperity. But even if that happens, things won't simply return to the old normal. China has already diversified its suppliers and invested heavily in new partnerships around the world. At best, the US becomes just one of many global suppliers, forced to compete fiercely on price, reliability, and quality. The more likely scenario? The current crisis becomes permanent, with many farms unable to recover or adapt quickly enough. As China's new trade relationships solidify, American farmers are left fighting for scraps in a shrinking market, struggling to find buyers for their harvests. Prices stay low, farm incomes remain depressed, and the slow decay of rural communities continues, affecting not just farmers, but entire towns. Many farmers may be forced to rely on government subsidies just to survive, turning to safety nets as a last resort. To adapt, US agriculture must reinvent itself, diversifying crops, finding new international and domestic markets, and focusing on higher value products that can command better prices. But these changes are costly, require new skills, and progress is often slow, especially for small family farms with limited resources. Strategic planning and significant investment are needed, something that's been lacking for years, but is now more urgent than ever. The road to recovery is long, uncertain, and filled with obstacles that will test the resilience of America's farmers. There are no easy answers, only hard choices ahead, and the future of rural America hangs in the balance. As of January 2026, the US Farm Belt is on the brink. The trade war left deep scars, trust is broken, and the economic fallout is severe. China's strategic shift is permanent. America is no longer the world's agricultural center. Rural communities face a cycle of debt, bankruptcy, and depopulation. Without a dramatic turnaround, many may never recover. The fate of the American farmer hangs in the balance. Can they find new markets, diversify, and adapt? Or will they become relics of a lost era? The next few years are critical. For farmers, for rural America, and for the nation. The harvest of these choices will shape America's future.